Dear students, a warm welcome to session 2 of International Financial Reporting Standard of 5th semester. This is second session of Unit 1, Introduction to IFRS. In the previous session, we had a discussion about meaning, introduction relating to International Financial Reporting Standard. The learning objective of this session is we will have a brief idea about overview of IFRS in India, why IFRS in India, and proposed roadmaps for IFRS in India at various stages. By the end of the session, your students will have a clear clarity and understand regarding relevance of IFRS in India, and roadmap of IFRS in India. By looking at this picture, we get an idea that IFRS in India has arisen in different phases and stages. Let's have an overview of IFRS in India. Dear students, convergence with international accounting standards, International Financial Reporting Standards issued by IASB is getting its due weightage over a period of time. It is on 2nd January 2015, the Press Information of Bureau, Government of India, Ministry of Corporate Affairs issued a note outlining the various phases in which Indian accounting standards converged with IFRS, that is INDIS. It is proposed to be implemented in India for companies other than banking companies, insurance companies, and NBFCs. If we talk about current scenario of IFRS in India, we know that most of the companies are adopting IFRS just not only because they are expanding their business across the globe, but also they are looking for unique and standardized reporting system which will help them to provide true and fair financial picture of the organization. Why this fair and true financial picture of the organization is required is to have a uniform and a basic common language to be discussed. However, different countries have their own IFRS accounting system and disclosure policies, like how the US have their US GAAP. What do you mean by this GAAP? Generally accepted accounting principles. This GAAP system, where companies in the US needs to be mandatory to follow these standards while reporting. Hence, similarly, Indian companies also need to follow INDIS, Indian GAAP, with respect to same accounting treatments. These different reporting methods may create confusion among stakeholders of the company while taking any decision relating to its investments or any management decisions as such. If the reporting or disclosure policies of the financial statement are based on unique and globally accounting standards, this will enable the organizations to deliver a fair and trustworthy financial information to its stakeholders. Thus, this is one of the major answers of why companies go for IFRS. Yes, let's have a look over the answers for why IFRS in India, why we should have a common reporting standards to be adopted by most of the companies in spite of having INDIS, which is already in existence. There is a question, why IFRS in India? We already have Indian GAAP, then why companies are going for IFRS in India? Just simple. It helps to improve transparencies in an accounting system, to go globally, to adapt to new opportunities, allow exercise of professional judgments. IFRS also becoming rare because it has some limitations also. We know that every merit has its own demerits if we compare with other concepts or policies as such. Since Indian GAAP is having its own demerits, IFRS took an opportunity to be replaced by it. IFRS are increasingly being recognized as global reporting standards for preparation of financial statements as such. Hence, also as global markets become increasingly integrated, most of the countries are adopting IFRS system in their preparation of financial statements. More than 100 countries have already got permission to use IFRS in their countries. Then, now let's have a look about what are the phases of IFRS in India. The proposed roadmap for IFRS in India are in 3 phases: Phase 1, Phase 2 and Phase 3. In Phase 1, Indus will be mandatory applicable to most of the companies for periods beginning on or after 1st April 2016 with comparatives for the period ending 31st March 2016 or thereafter. Companies whose equity or debt securities are listed or in the process of listing on any stock exchange in India or outside India and whose net worth is 50 crores INR or more, as well as companies having net worth of 500 crores INR or more than those covered above comes under this category. Holding, subsidiary, joint venture or associate companies or companies also are covered under this Phase 1. In Phase 2 and Phase 3, Indus, that is Indian accounting standards, will be mandatorily applicable to the following companies for periods beginning on or after 1st April 2017 with comparatives for the period ending 31st March 2017 or thereafter. Those companies are listed as such: companies whose equity or debt securities are listed or in the process of being listed on any stock exchange in India or outside India and having net worth of less than rupees 500 crores. Also, unlisted companies other than those covered in Phase 1 and 2 whose net worth are more than 250 crores INR but less than 500 crores INR. Holding, subsidiary, joint venture or associate companies of above companies are covered under this phase. Dear students, remember India has announced the application or applicability of new standards with effect from 1st April 2016 in these 3 phases. Whatever existing standards will cease to apply after those dates. Hence, the need to learn the new standards has become mandatory and it is implemented in India as discussed under 3 different stages. Dear students, to evaluate this session, we have some MCQs question and answers for your reference so that it will be useful to take up your internal test in future. Thank you.